You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. And from our studios in Las Vegas, Nevada, Mr. David Williams. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today is Wednesday, 13th day of January 2016. Let's take a quick look at the numbers. These are cash markets, not the futures. We'll start here in the U.S. markets. Color of the day, red. The Dow's down 110 points. S&P is down 12.5. NASDAQ is down 49, and the Russell 2000 is down 12.5. To put things in perspective, the Russell is down more than 1%. NASDAQ more than 1%. And the Dow and the S&P almost 0.75%. Now, if I'm not mistaken, this pushes the Russell firmly into bearish territory. We'll take a little closer look at that during today's program. Now, the commodities actually are green. There's the color of the day there. Oil up 3 cents. Hey, go oil. Gold is up $6.40. It's a half of 1%. In Asia, the markets are mixed. Nikkei, Japan, up 496 points. That's strong. That's almost 3%. Shanghai, down 72 points. That's 2.5%. And the Hang Seng is up 223 points, which is a little over 1%. That leaves us with Europe. DAX down 24 points. FTSE up 31 points, and the CAC 40 up 13. So that puts the DAX down 0.25%, and the FTSE and the CAC both up, about 50 or half of 1%. So there you have it, mixed markets, but the weight is heavy. Netflix is down. Amazon is down. Remember, we were talking about the FANG stocks just a couple shows ago. Facebook, Amazon, Netflix, Google. Any strength that relative strength that we saw in the markets last year really hinged on those 4 heavyweights. Everything else looked pretty weak. Now, there's some bold predictions coming out, and from some pretty smart people. It's not the same crowd that said gold's going to 5,000. And I'm not saying gold's not going to 5,000. I'm long-term bullish on gold. I may not live long enough to see my long-term vision, but I am long-term bullish on gold. However, a shorter-term forecast for U.S. equity markets, there's some pretty smart people calling for a 75% rout. Okay. Now, the last time the S&P 500 took a major tumble, considering that this is the Christian Financial Radio Network, most of us will never forget that day or that number, 666. Yeah, I know. Just had to say it. But it's the truth. Now, what are the predictions this time? What if we do have a 75% decline? Where does that put us? Where does that put the S&P 500? 550? Really? Now, when they say everybody's bearish, that's the time to be bullish. And when everybody's bullish, that's the time to be bearish. But maybe sometimes when some smart people are bearish, maybe it's not a bad idea to be a little cautious. Always be on the lookout for opportunity. As the mighty S&P was crashing to that 666 low, what incredible opportunities sprang out of that carnage. So, limit yourself to the downside. Perhaps not a bad time to be in cash until we see exactly how this market is going to shake out. The first month, the old saying, we've talked about this, there are many old sayings. We don't have time for all of them in today's program, but as the first 5 days go, so goes the year, and then there's as the first month goes, so goes the year, and the list goes on and on. Pick whichever one you want to believe, and then, believe it or not. I don't put a lot of stock in those things, but so far, we know what's happened this year, and it hasn't been particularly bullish. I have here our daily chart, and we'll peek at that for just a moment. Yeah, this is the one we did a whole lot of drawing on a week or so ago. Okay. Now, here's the really important part. From the swing low, this is the S&P 500 Emini Futures. This is a continuation chart because it allowed us to go all the way back to the beginning of last year. See, this was January and February of 2015. Pretty bearish. And then we popped up into this little channel here, stayed there until August, where we sold off. And that's where we put in the low of last year. It was August 24th. And then we climbed out of the hole with a leg and a retrace and a big leg. Took us right back up almost to the very top of this channel. And this channel, it was not, scientifically drawn with a precision instrument. I just took this little tool and went like that. Okay, so don't put too much into the box. It's an area. That's all I'm trying to project. Just as fibs are an area. Okay, yes, I know that they are an exact number on the chart, but if you've used them as part of your trading toolbox for any length of time, you know at best that they are representative of an area. And so from this low to this high, we saw a 38% retracement, okay, and a very healthy bounce. Looked good. Unfortunately, we failed to put in a higher high. That's a warning sign. Maybe we're just going to go for a deeper retracement and then put in a higher high. And so back to the 38, yeah. Deeper retracement, yeah. But then a lower high. And then back to test this same area and a failure to put in a higher high. So we have a lower high, two lower highs, and then this 50%. We really expected to see a significant show of support from the buyers at this 50% retracement. We caught, I think, a one-day bounce off of that 50. No, actually, on the day that we touched that 50% retracement, now again, this is not the cash market, this is the futures. So if you draw these fibs on the cash market, it'll show a little bit differently, but nonetheless, as we came down and we tagged the 50, okay, we caught a bounce going into the close that day. But when the markets opened that night at 6 p.m. Eastern on January 7th of this year, now today's only the 13th, but when the markets opened here, this was the 6th, this was the 7th. Look at how we sliced through that 50% retracement. Now, this is on a daily chart. This isn't an hourly. This isn't a 4-tick range. This is daily. When you slice through a 50% retracement on a daily chart as though it's not even there, that makes you wonder what's next. Well, what's next was the 62% retracement, which also had a difficult time holding. We caught a bounce, half-day bounce, and then look where we closed, which brought us to the 11th, Monday, yesterday, the 12th, and now today the 13th. And look where we're trading. We've overshot that 62% retracement, which was from the low of last year to the most recent significant high on a daily chart. And here we are hanging out below the 62. Okay? We've talked about what happens if the 62 doesn't hold. Where's the next reasonable place to look for some potential support? Well, comes from this area here. Okay? From this low, that should create a low risk trade. Should be good for a bounce to the upside in a healthy market. What we have signs are not a healthy market. Could it all be laid on the back of China? Part of it. Could it all be laid on the back of crude? Part of it. But can an awful lot of it be laid on the back of the Fed? See, in 2008, we started to print the money and prop up the economy. And when Janet Yellen came in, she unplugged the printing press. She says, we're not going to do that anymore. In fact, she said, we're going to start raising interest. And she actually is kind of behaving like an adult. But the jolt to the economy this time around is going to be, I believe, far greater than if we had just let it happen back in 08. Just let it happen. Let the market sort itself out. That creates a strong and healthy market. We've been living off the back of an artificially inflated market now for many years. There are many traders who don't know what it's like to trade in a market that is normal and naturally healthy, one that is not fueled by funny money, money printed out of thin air. How are they going to react when these realities begin to set in? Is it going to be 1929 all over again? I pray not. And besides, most of the upper floors on buildings today have windows you can't open. So at least we won't see those kinds of tragedies. I've never been a bearish type person. I've always been very bullish, always kind of looked to the upside. But the picture that's being painted right now is pretty grim. I do hope something will come about, turn around, change, happen that will spin this in the other direction. But I fear that natural law has to come into play, and this thing has to sort itself out the way it should have back in 08. It would have been less painful then than it's going to be now. Good news is we kind of know what it looks like. We kind of know what it feels like. We kind of know how to deal with it. The worst thing that could possibly happen, the worst thing that could possibly happen is that Janet decides to plug the printing press back in. Now, a grand solution is to stop incentivizing banks not to lend money. I understand she has a fiduciary responsibility to make $2.7 trillion that were created out of thin air disappear into thin air. She has that obligation. But how about just for now, instead of rewarding banks for not lending, why don't we penalize them? Why don't we charge them a fee to sit on that money and not put it into circulation? I'm not talking about the craziness that we saw in 04 and 05, where if you could fog a mirror, you could get a $500,000 loan to go buy a home that you couldn't afford. No, I'm talking about credit-worthy individuals who want to build businesses, create jobs, and stimulate the economy the way a free market economy should and needs to be stimulated. As oil prices continue to slide and tensions continue to flare in the Middle East, all eyes are glued on Iran and Saudi Arabia. Is this part of the problem that we're facing here now? Yes, it is part of it. But there's another unpredictable player in OPEC that everyone should be watching, and that's Libya. Libya is the only other real OPEC supply wildcard to the upside for 2016. With over 1 million barrels currently shut in due to the ongoing security and political challenges, it remains one of the few OPEC countries that could theoretically put substantial quantities of additional oil on the market this year. So this oil glut that we have, here comes some more. Things have been very chaotic in Libya since Muammar Gaddafi was overthrown in 2011, as two rival governments and numerous armed groups have been competing for power. But back in mid-December, delegates from the various Libyan factions signed a deal to form a national unity government. Some analysts think this could be a major turning point for the country and subsequently could mean that its oil may soon get back on the market. Is that good or is that bad? Well, when you and I go to the gas station to buy gas, I suppose that should be a good thing, but yet we hear in some parts of the U.S. right now that gas prices are on the rise. The new government of Libya is meeting in Tunisia, and key stakeholders have criticized the agreement or have not participated in the process. Libya is looking at an emerging security threat, the Islamic State, that seems keen on damaging Libya's energy infrastructure. Unlike in Iraq and Syria, the goal of the Islamic State in Libya is not to operate the energy infrastructure to generate revenue, but to deliberately destroy it. I don't know if you saw the speech last night, the State of the Disunion, but we were told that national security is not a problem. We were told a lot of things last night. Can't wait to hear your thoughts and opinions on what you heard in that speech last night. And so let's do this. Let's bring Michael in, get a recap of everything that happened in the live trading room today. When he's finished, we'll take a look at a couple of the Concierge Trade Alerts from last night. After we do that, we'll chat with David, get his forecast from the edge. But I'm really interested to hear from you. Of course, we'll answer your questions as we move along. But I'm really interested in hearing from you what you thought about what you heard, about what was said last night. I know you've seen the most recent polls. Where do you think we're headed? 2016 was going to be the great year, the turnaround year, the comeback year. Is it? Will it? Can it? Let's keep our fingers crossed. Michael, you ready?
Yep, I'm here. I am.
Take it away.
All right. There we go. All right. Yeah. All right, I'm going to hit record. All right, good afternoon, everyone. Today is Wednesday, the 13th day. Wednesday, the 13th day of January, 2016. Today in the live trading room, let's go way down to the bottom here. Today in the live trading room, we made 21 ticks on the Russell, 26 on crude, 20 on gold, and we lost 15 on the NQ. This morning it took us 21 minutes and 4 trades to get to our goal for the day. At that point we're up $100 a contract, and we took a total of 21 trades today. All right, so now on the month of January we are up $3,220.00. That's over 8 trading days, averaging $402.50 a day. Those are gross numbers. Now the net numbers over here, $2,116. That's with an $8 commission. That would be the net profit with an $8 commission if you took all 138 trades. With a $5 commission, the net profit would be $2,530. Okay. Down here, the annual numbers are obviously for the month of January. For the whole month of January, you're going to be the same as the monthly numbers. Okay. But 8 trading days, $3,220 a contract. Okay, averaging forward $250 a day. All right, that is that. Now, if you have not taken a free trial with us, you just need to go to the home page at CFRN.net. In the right-hand column where it says name, put in your name. Where it says email, put in your email. Then click on register for a free trial. When you do that, you'll be sent a confirmation link. You must click on the confirmation link. Okay, you must click that confirmation link. If you don't click the confirmation link, you will not get the free trial because we won't know that you took the free trial. Okay. Yeah, that's all that stuff. All right. So now let's get into the markets here. On gold, those are our trades right there on gold. Our 5 trades. We got long right here on that trade right there. We took 7 ticks profit on that. Okay. The next trade we took over here, 4 ticks profit, putting us at plus 11. Then 6 ticks profit, putting us at plus 17. Then 4 ticks profit, putting us at plus 20. And we had a break-even trade there. Now during the break there was some nice movement here on the gold. You can see nice move up right here between right here and right there. Yeah, that's it. That's good. Gold is actually setting up a short trade right now. If you get a down close of the current bar, that would be a short trade off the BBC on gold. Okay. So that was our day on gold. We had 5 trades and we're plus 20 ticks at $200 a contract. All right, the Russell had a lot of movement here during the break. Look at all that. Had this big move down. 36, it dropped all the way down to 25 at an 11-point drop. And then it started to go sideways for a little while here. It's going down again now, but well, we are not in it. Okay. Let's see. Our first trade on the Russell was right in here. We had a break even on that one. Oops. And our next trade on the Russell was right over here. We had a break even on that one. And you can see it was going all over the place. I mean, overall the trend is down. Right in here, it tried to move up, but it failed. Then we got into this trade right here, and we got 17 ticks profit on that one. Okay, we missed a trade there, and there, and there. And finally over here, we got short again, and we got 4 ticks profit on that one, putting us at plus 21. Let's see. Looks like there was a long trade right in here that we could have taken. Didn't put in a higher swing. Changed directions, and there was really nothing we could do in there. Long trade right here we could have taken, but I didn't. And nothing in there because it was going into the zone and into dynamic resistance. Excuse me. All right, and during the break, that was it for the live trading room. Now during the break, on this huge move down, you could have shorted it right there. Right there, right there, right there. Those are the spots that the cycle supported shorting. Okay. During the sideways movement, there was a short trade right here, would have been break even. And that was pretty much it. Yeah, that was it. So on the Russell, we were plus 21 ticks. Plus 21. Okay. In crude oil, let's scroll back. Okay. Yes, the volatility is great. And yeah, the Russell had a nice move right after 11:30. That's why the trade alerts go out at 11:30 now. All right, so on crude right here, we had a break even there, and picked up 3 ticks profit on that one. That's where we got our goal for the day right there. We got these 3 ticks profit right here. Another break even in there. Okay, and crude inventories came out at 10:30. I had suggested shorting here, 30.98 on the crude. That's why that line is there. I said suggested shorting that. The Russell's been doing pretty well, I think, John, but I don't know about the crude. And then once we had this big move down, I said what usually happens is price will go back up to that level, and we'll get to that in a minute. But we had another break-even trade there, a trade I missed there. Then finally, I got 12 ticks profit on this one, putting me at plus 15. 1 tick there, putting me at plus 16. Missed a trade there, and you see how close it got to going back up to that level, right there. But I missed a trade there, missed a trade there. Then I got 10 ticks profit on this one, putting me at plus 26. Good. 3 tries at that level. All right, then during the break, let's see what we had. 1 shorting opportunity here would have been break even. That was it during the break. It was just really choppy in here. And nothing lined up just right. But we had the 1 shorting opportunity. Okay, so we ended up with plus 26 on the crude. Now the NQ. On the NQ. Let's see. I started out right here with plus 5 on the NQ. Okay. I had plus 5 right there on the NQ. And then I stopped out right there, put me at minus 11. Okay, then I picked up 8 ticks there, put me at minus 3. Then I missed a couple of trades there. There. And I finally got one here. Stopped out again. That put me at minus 19. Okay, picked up 4 ticks there, put me to minus 15. Missed a trade right there where I could have probably gotten break even. And I did get I could have gotten all the way back to break even. And I did get a break even on this one. This one right here would have been short at what? 1 1/4, and it dropped all the way down to 6 1/4. So that's what, 5 times 4, 20 ticks. It was there. Okay, then in here, I missed this. There was a long trade right in here. A long trade there. And then we get into the break. Now, during the break, let's just look at what we had. There was a shorting opportunity right there. Okay. Shorting opportunity there, and again there, and there. And then the cycle didn't line up for shorts until all the way back here. Okay, so right in there. And that was it for the NQ. We were minus 15 on the NQ today. minus 15. All right, on the ES. Let's see, I think. Let's scroll back here. All right, I think we just had the one trade there on the ES. Back it out this way. Okay. Well, we did just have the one trade on the ES, and it was a break even. So with that, let's look here. Okay, we really did just have the one trade, and it was a break even trade. If you have not taken our free trial and you want to take our free trial on the crude that I spoke of. Oh, okay. I see. I'm sorry, John. I was just reading your comment. If you have not taken a free trial and you want to take the free trial, just go here to CFRN.net on the home page in the right-hand column where it says register for a free trial. Put in your name, put in your email, click on register for a free trial. When you do that, you'll be sent a confirmation link. You must click the confirmation link, okay? If you don't click that link, you will not get a free trial because we don't know you took the trial unless you do that. Results, again, we're plus 21 on the Russell, plus 26 on crude, plus 20 on gold, and minus 15 on the NQ. So we're up $595 a contract. On the month, we're up $3,220 a contract. That's over 8 trading days, averaging $402.50 per day. All right. The yearly total is the same right now. 21 trades today, John. Today it took us 21 minutes and 4 trades to get to our goal, and we took a total of 21 trades. Okay. And that is that. Now with that, we can head back out to Phoenix. And I'll stop the recording. There. All right. So if you're available, Phoenix, we can head back out to you.
Yeah, right here.
Okay.
Grab the screen here just a second.
Okay.
So recap the recap for today.
Recap of the recap. Today it took 21 minutes and 4 trades to get to $100 a contract.
Okay. All right. I'm sorry, what was that again?
21 minutes and
21
4
minutes,
trades.
4 trades. Okay, that's great. Yeah, that's awesome. That's a really important number, guys. That's one you want to kind of hone in on. Not that it's a race to get your job done for the day, but it is important to really kind of wrap your mind around the fact that it is possible to actually get the job done every day. Go look through the spreadsheet. There's the rare day that we didn't make our goal for the day. There's a few days where we made our goal, and because we continue to trade, which is the very thing we teach you not to do.
Here, a blue day right there, where I gave it back.
Yeah, I was in a mentoring session this morning with someone, and they're like, well, I just don't understand why, after you make your daily goal, you stop trading. And we walked through the reasons, and anyone in this audience that has traded for any length of time has experienced the days where that very thing does in fact happen to you, where you trade and you're having a great day and it's awesome and you're on fire and nothing can touch you or stop you, but yet somehow by the end of the day you end up negative.
I was just looking.
You owe the
Just
market
looking
money.
for the year. One.
And So how many did you count
up? Last year, there were 8 days where I gave it back. 6 days where I was down.
Okay.
Well, eight days where I gave it back and ended up down. 6 days where I didn't actually get my goal for the day last year and ended up down. And 1 day, it looks like I only had one yellow day in there. 1 day where it was positive, but I didn't get my goal. There's one yellow right there. 2 yellows. Sorry, 2 yellows. And all the rest were green. That was last year. This year, so far, knock on wood, there was 1 day where we just barely made it positive again. But we're averaging $402 a day right now, gross, and 17 trades a day right now in the live trading room. If you look at the number of trades it's taken me to get my goal this year so far, 4, 1, 3, 1, 3, 2, 1, 4. In these days where it seems like it took a long time, 21 minutes, a lot of times that's because I had technical issues. But
again, it's not a race, but the idea is that you reach your daily goal, and then you go embrace life, come back the next day, you reach your daily goal, you embrace life. You think, well, gee, I'm not trying to, I don't have 20 years to build a career here. Well, if you take it one step at a time, the 24/20 blueprint is designed to take you from one contract to 20 contracts over a period of 24 months. Okay? Now, you may need to hit the pause button for any number of reasons along the way. You might have sickness in your family, or you have emotional problems or relationship problems, or whatever it might be. Or it could be that you hit the 5 contract mark and you feel really comfortable there. That's a nice income. It's $500 before commissions. Some days your commissions will be higher than others. Depends upon how many trades it takes to reach your $100 daily goal. Yes, at 5 contracts, we still focus on a $100 daily goal. I know that 5 contracts times 100 is 500, but you're not reaching for more points. You're not trying to do more. You're doing the same, and that's the point we want to drive home. Is you're doing the same. You make more money for doing the same work. That's why we believe the answer is more contracts, not more points. But the critical part of that is that you are increasing the number of contracts with profit you earned in the market. It's not that you think, okay, man, I've got it now, so I'm going to go out and borrow some money, whether it be from Aunt Ida or from the IRA or the 401k. No, you're financing your growth internally. Okay, it's like a dream business. What? I'm financing my growth internally? Yeah. Once you qualify to go live, you trade 1 contract until you increase your balance by $2,000. And then you add a 2nd contract with money you earned in the market. And then after a period of weeks, you'll add a 3rd contract with money you earned in the market. Now, I don't want to say that it's impossible to blow up your account using our methodology, using the 24/20 blueprint. But you got to break an awful lot of rules. You got to work really hard to trade in the opposite direction, because our model continually pushes you forward. And if you're not moving forward, then the instructions are quite clear. You go to SEM and you get some help. You get some mentoring. We take a look at screenshots, at your journal, at your business plan, at your trading plan. We ask questions. We figure out where the chink in the armor is. Could be you were stressed out. Could be your mind was a million miles away because you have some issue going on in your life. Could be that you slowly just drifted away from the center line, that very thing that kept you consistently profitable for so long, because it's been a long time since you read your trading plan and read through your business plan. and really got focused on what your job is each day, make $100. Doesn't matter how many contracts you're trading, your job every day is make $100. Everything else then takes care of itself. If you don't lose sight of that, that's the cornerstone of your business. It's the foundation, and that's what you build off of. And if you come and train with us, if you enter into our 90-day mentoring program, that's what we're going to instill in you. You have to learn to think in probabilities, but more or equally as important, I don't want to say more important, but equally as important, is you have to be disciplined. You have to be disciplined in your actions, and to hit that daily goal and to feel like you're on a roll and to have the strength to put the mouse away and walk away on top, like Seinfeld. Remember, Seinfeld left when he was at the top. And people say, dude, you got the most successful television show on television. You're making $1 million an episode. Why would you possibly walk away? He said, I want to go out on top. We want to go out on top every day. We want to hit our goal, walk away, not cocky, but confident that we can come back tomorrow and repeat it. Why? Because it's not luck, it's a skill set. All right, let's go to our good word for the day. How to overcome anxiety. Now, that's something that all traders are far too familiar with. Matthew 6:25 says this. Stop being, this is the amplified version, stop being perpetually uneasy, anxious, and worried about your life. Therefore, I say to you, do not worry about your life, what you will eat or what you will drink, nor about your body, what you will put on. Is not life more than food, and the body more than clothing? Matthew 6:25. Now, the anxiety of modern day life is certainly much different than the anxiety of the days of Matthew. But many of the anxieties were the same. Providing for the family, putting a roof over your head, putting dinner on the table, sending the kids to school. See, sometimes the more things change, the more they stay the same. So here are some steps to overcoming your anxiety. Number one, talk to God. Don't bemoan the collapse of an investment or a trade. Ask God to help you. Now, He's not going to manipulate the market for you. He's not going to move the S&P or the Dow to save your bacon. I mean, think about all the traders all over the world, right? Some are long, some are short, all at different prices, some at the same price. But we cry out to Him, oh, I want to do good works, God. I want to build churches. I want to build orphanages. I want to feed the hungry, But He causes the rain to fall on the just and the unjust. So, yes, you can cry out to Him for help, but the help has to be, God, help me learn, not help me by manipulating the markets on my behalf. You'll get a positive response to one prayer. You'll get a deaf ear to the other. Don't pace the floor of the hospital waiting room. Pray for a successful surgery. Casting the whole of your care, all of your anxieties, all your worries, all your concerns, once and for all, on Him. That's 1 Peter 5:7. Cast all your cares upon Him, for He cares for you. So, number one, talk to God in prayer. Number two, slow down. Rest in the Lord and wait patiently for Him. Psalm 37:7. Rest in the Lord and wait patiently for Him. Fret not thyself because of him who prospereth in his way, because of the man who bringeth wicked devices to pass. Okay? Just because somebody else is a cheat or a thief, don't begrudge them their money. The enemy can prosper anyone for a season. You're looking for eternal prosperity. You're looking for prosperity for your soul. And so in this hurried, fast-paced life in which we live, slow down. That's number 2. Slow down. Rest in the Lord and wait patiently for him. Jesus' first miracle took place at a wedding. They'd run out of wine, which was a social disaster back in the day. Many could have blamed the host for poor planning or the guests for over drinking, but instead, she took the shortage to Jesus and he solved her problem. You can do the same. Assess the problem and then take it to the Lord in prayer. Number 3, don't let your anxieties get the best of you. When a mosquito lands on you, don't say, I'll take care of it in a minute. No, you kill it before it bites you. Be equally decisive with your worries. The moment they surface, deal with them. Before you rush to diagnose that mole as a cancer, have it examined. Instead of assuming you'll never get out of debt, consult a financial expert. Be a doer instead of a stewer. Get that? Be a doer instead of a stewer. No offense to. Horace Bushnell said this, and I know you all know who Horace is. Anxiety is a word of unbelief or unreasoning dread. We have no right to allow it. Full faith in God puts it to rest. The crosses we bear over anxiety concerning the future aren't crosses that come from God. So give your anxiety to God and leave it with him. That's our good word for the day. All right, let's take a look at this chart. S&P 500, Emini Futures. Hourly chart. Sunday night Globex open. We did a leg and a retrace and a leg. And then during the show on Monday, we drew these 2 little lines here. And we said, if price comes down through here, we should find support in this crudely drawn little box and find some support. And we did. And we took a bounce, a leg and a retrace and a leg. And then yesterday, during our broadcast, we put this little box. We said, you know what? If this area of support here doesn't hold, then we drew this little box, and look where we actually found support in the 2 o'clock hour yesterday, right at the bottom of that little box that we so crudely drew. And then overnight, we rallied. Now, remember back on Sunday night, we had a Concierge Trade Alert long above here, short below here. That was Sunday night. We just barely managed to breach the upside on the overnight session last night by a few points, but that wasn't the alert for last night. Okay, the alert for last night was they change each night. Last night, our alert was to be long, and let me bring that up and find it. And there it is. Last night, we were looking to be long above 47, which is, the swing high here was 46.50. So we never got to 47, okay? That was where the show of strength would come in if we could cross 47 to the upside. If that doesn't happen, then be short below 27. And so this initial break below 27 took us down to 23. So that's a 4-point move in the S&P. If you're trading the 2420 blueprint, your daily goal is 2. Important prices, important areas are almost always tested, and so no surprise, we come back above the trigger, down we go again. Okay, on this move down, we put in a swing low at 1918. So that's a 9-point drop from 27 to 18, 9-point drop. No one gets in at the exact swing high or the exact swing low. Maybe some do. I don't, I'll be honest. Okay. But I do know how to trail a stop, and we teach our partners how to trail a stop. And so this third candle here, as you can see, has actually moved all the way down to 1910 and a quarter. And so that's just a tad shy, 1 tick shy of 17 points, 16.75. Now, based upon whatever your method of trading is, whatever level of skill you have in the market, how many contracts you trade, where you take off your initial, how you trail the balance, how closely you trail it. The market so far from 27, the market itself, not us, not our indication, we gave you a firm entry. We teach you how to set your stop, okay, on this first breakthrough. If this stop was too much for you, you can drill down to the range chart where you only need risk 8 ticks. It's entirely up to you if you want to enter the market possibly multiple times. The beauty of doing it that way is if the market is not favoring your position, you won't get a second trigger, okay? So give careful thought to that. On this next move down below, price opened here. We rallied back up, price opened here. We got a move here. And so a stop here. And even the more cautious could have been here. Or again, you can drill down to the range chart and use the same setup that we use in the live trading room to enter this trade and minimize your risk. So you can see what the market made available to you. The question is, how did you manage the trade? Once you were in it, how did you manage it? If you want to learn different ways of managing that, sign up for a personal mentoring session or bring those questions to the workshop Thursday night, and we'll dive deep and get into some detail on how you can manage that to maximize your profit potential. Or maybe you're just simply happy to follow the blueprint, get your 2 points for the day, and be done. We'll focus on that as well. That's tomorrow night, 9 p.m. Eastern. So please, don't forget, be there. All right, let's go talk to David, a page trader, get his take on the markets, his forecasts from the edge. We'll be right back. Don't touch your radio dial.
You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310. and we'll send you out a no-obligation information kit absolutely free. 866-928-3310.
We don't need you now. You're on your way. I thank the Lord for love like ours that grows ever stronger. I always will be true. I know you feel that same way too.
Good morning, Dwayne.
Hey, Dave. Welcome to the show.
Thanks very much. Pleasure to be here. Thanks so much.
So, what'd you think about the State of the Union last night?
Well, pretty much what I have thought about previous states of the union. It's a high point for the president to try to sort of rewrite history a little bit and, accentuate whatever he felt was good that has happened, and to de-emphasize or color or completely disregard the bad things that have happened. He wouldn't make a good trader because he trades with lots of different little colorings throughout there. I think trading would be a little too direct and too brutal for him. But it's politics, and that's what that's what his passion is. If he is anything, if our president is anything, he is a pure politician, and he's that's what he did last night.
Now, if I'm not mistaken, one of the comments he made was national security is not our biggest problem.
Well, he has a way of dismissing issues by pointing to larger issues. Like, as an example, 12 people get killed in San Bernardino, and he'll expand out and say, listen, to sort of diminish what happened there, they're not going to take over the whole United States. He'll say something like that. They're not going to come here and take over the United States. Well, that broadens your view to this huge viewpoint of the United States of America, but it doesn't address the horribleness of what happened in San Bernardino. He has a way of juxtaposing large picture against very small picture to make you go, oh, okay, well, yeah, I guess, yeah, we're safe because they're not going to take over the United States, but he'll have to keep increasing larger and larger those big pictures as they keep doing more and more damage to us. He's very clever with the way that he chooses his words, and this is everything to him. This is like trading for us, is him ducking, dodging, weaving, rewriting history. This is what he's all about, our president. He doesn't actually have the skills to do the things that he talks about, but he has a very good way of putting the illusion up that he has those skills, the illusion up that he's doing something. I mean, he was lecturing us, everyone, on civility in politics, and this is the man whose whole business is to divide and conquer and to create incivility in politics, to not have any compromise in him at all, and so on. And everyone, followed suit. It comes from the top down. His
actual words were over-the-top claims that this is World War III. Just play into their hands. He was speaking of the Republicans. The president said, arguing that ISIS fighters do not threaten our national existence.
Right. See, he has to go to existence, our whole national existence, because he doesn't want to address what they actually were able to accomplish. He wants to address a much bigger picture that he's saying, well, they're not going to be able to do this, and now they break into your home. Well, they're not going to be able to get into our bedroom. Now they break into your bedroom. Well, they're certainly not going to be able to get to where we're hiding on the roof. He has to keep. They're certainly not going to destroy the neighborhood.
He wants to have them over for cocktails.
Right.
He wants to have them over for cocktails. But my question is, Mr. President, after cocktails, when they tie up your wife and your daughters and rape them and make you watch, then what?
I don't know what then what for his is. He's just counting, Dwayne, that isn't going to happen. That's what he's counting on, and he's got 300. It's what they do. And the mistake in the public, the public is not making a mistake here, and the public is not stupid. One of the reasons that Donald Trump is such a popular figure is because he is not holding back. He is saying what he really thinks. He is saying that these people need to be destroyed. Even our own president has never said really that he's going to destroy ISIS. He just says degrade them. His whole thing is, contain and degrade and all these words that are very, very carefully chosen to lay out a very low bar for him to have to jump over so that he can say he fulfilled what he said he was going to do. And he's been wrong about that, even, because when he has said that they have been degraded, or when he says that they have been contained, there they are showing up in Paris, there they are showing up in San Bernardino to say, no, we're not contained. And this president does not know what the next move is going to be. And I think it's very disingenuous for him to suggest how safe the United States is when they're attacking us in the United States, and when they're recruiting over the internet thousands of people potentially from the United States. We just had another attack the other day where a deranged man under the name of Islam shot a policeman in his car who was just sitting there. And the policeman, in the most remarkable turn of events, after the guy unloaded 13 or 14 bullets, whatever, I don't know how he had that many bullets in a gun, but however many times he shot, one is enough.
Must have been one of them Republican guns.
Right. He had plenty of bullets in there, and he did hit the policeman 2 or 3 times in the arm, apparently. Policeman got out of his car and chased this guy down and shot him, and they caught him. And the world
they'll
has
probably send that police officer. He'll probably go to jail.
Yeah, he'll probably go to jail. But the world has gone topsy-turvy because the mayor of that city, even now, even when suspects say, I am Islamic, and I am part of ISIS, and I'm doing this on behalf of ISIS, even when they say that themselves, the mayor comes out and says, this has nothing to do with ISIS, this has nothing to do with Islam, this has nothing to do with Islamic terrorism. It doesn't even matter if the suspects are yelling that out at the top of their voice. We're now at the point where we're going to tell you, the public, that this was just an ordinary crime. Everyone on the left is starting to just rename everything. Everything is called something else, even when the perpetrator is calling it and telling you, this is why I did this. I'm all for ISIS. I'm on their team. No, that's not what it's all about, really. I've never seen anything like it. It's the emperor has no clothes. And all of that started with this president.
Ted Cruz tweeted last night after the address. He said, this was less a state of the union and more a state of denial.
Right. That's good.
That's really good.
But we've never seen anything different from this president. This is not new. This is how he deals with reality. He has his ideology blinds him to reality, or he knows what reality is and he leans on ideology heavily to not have to address it. But I can tell you this, I've never in my whole life seen something like this president. I've not seen us in any set of conditions with any president in the past have this unusual set of talents, if you will, and skills and denial and subterfuge that this president does. And I don't know that I'll ever see it again, but I sure have seen my fill of it. I'll say that.
Let me tell you something. The United States of America is the most powerful nation on earth, period, Obama said to those who say America is getting weaker. I'm sorry, but we're still flying B-52 bombers. And to those who say the economy is just limping along, Obama countered, anyone claiming that America's economy is in decline is peddling fiction.
Yeah,
he said America is the most durable economy in the world and one that has improved on his watch.
Gosh, yeah.
Yeah.
What world is he referring to?
We have...
it's the worst recovery in the history of America. It's the worst jobs recovery in the history of America.
And it's not a real recovery because it was done with fake money.
Yeah.
$2.7 trillion printed out of thin air that now they have to somehow magically make disappear as they made it appear. And so, I mean, there's some very smart guys who are talking about the bear market ahead of us. And I tend not to be bearish. I tend to be upbeat and positive, and I believe that, you know, these best of breed indices, the S&P 500 and the Dow, that over time they're always
They'll
going to
bounce
back and move higher. But the one guy from Societe Generale who is known for being right an awful lot about an awful lot of things. I don't have his name right in front of me, but I'll quote him tomorrow. He's talking about a 75% route that takes the S&P to 550. We hit 666 before, and then we built this fake recovery. Now, people go, well, what do you mean? Why is it a fake recovery? I mean, people really did get some jobs, and there really was, you know, okay, but now we're right back. You give a dance, you got to pay the man. Well, the man wants to get paid. We don't have any money to pay them with. Janet says she has unplugged the printing press. She says she's not going to go down that road anymore. She has raised interest rates a notch, but I mean, what's the next act in this play? The defiant remarks were met with skepticism from Republicans in the audience. And I got to hand it to, oh gosh, what's his name that was sitting right behind the president to his right?
Yeah, what's his name?
Paul Ryan.
Paul Ryan. Yeah, you could see the look on his face, I know.
He did a good job. I mean, at least he wasn't back there making goofy faces like Trump. I mean, he held it together, but you could tell that he just wanted to reach around and just give that man a noogie, you know? Yeah. He held it together. I was really impressed at his ability to hold it together.
We have tired as a public. We have tired of the theater of this president, of the theatrics of this president, of the soaring rhetoric, which is backed by nothing like his rhetoric. It's over and over again. It's almost like he's completely conscienceless, and he just says whatever he wants to rewrite history to say. And it doesn't matter if he's talking to people who are in the know or if he's talking to people who don't know. He just stands up and smiles and says it. And, you know, I mean, you got to give it to him. He's very good at doing that, but the public is onto him. The cat's out of the bag. And that's why people like Donald Trump, whether you like him or not, who are speaking what they really feel and very much likely will do what they say they're going to do instead of doing completely the opposite, you know, seem very attractive at this point politically. Yeah, I'm worried about America at this point. I mean, I usually don't even think about it. I'm worried about America because some of the pillars of America, our military, our finances, are being chipped away at by the policies of this idiotic administration. And at some point, the whole house comes collapsing down like it did in Greece and like it's done in the past. And, you know, if it has to do that before we come back, fair enough. But I can tell you this, that I would not want to trust in the soothing words of this administration as to how good things are and how bad things are not going to happen when the only thing that has happened in the past 7 years are bad things. Everything has gone wrong that can possibly go wrong, and they're telling us the sweet story of how good it is, and boy, sure wish he had another 8 years so we could have even more of this goodness.
And he just could not let go of trying to downplay the ISIS problem. It's like that was his single biggest agenda. He said masses of fighters on the back of pickup trucks, twisted souls plotting in apartments or garages. They pose an enormous danger to civilians. They have to be stopped, but they do not threaten our national existence.
Yeah, see, he has to revert to the biggest possible picture just to try to belittle the small picture, which keeps getting bigger. The small picture keeps getting bigger. They keep attacking, and he doesn't want to face it. He's still holding on to his original thing. Al-Qaeda is on the run. You know, terrorism is running away. He still is holding on to that. He just can't say, we got it wrong. We best get in and get it right now. He's spending all the rest of his presidency defending earlier totally disproved statements. He's going to spend the rest of his presidency defending those statements rather than improving the conditions so that these people have no chance of getting here. He's concerned about the truck driver driving the oil to ISIS, and he doesn't want to blow up those civilians, but he doesn't seem overly concerned about our civilians getting shot and stabbed.
Yeah.
But he's concerned about the people delivering oil to ISIS in the oil fields. And it was only after Paris that we started bombing some of them because Paris went right in and did it. He is full of crap, period. And he is nothing but political. He's been bad for the United States of America. Whatever good has happened in spite of his best efforts, not because of his best efforts. And it will not be displeasurable for most Americans, I think, to have a new person come into this office and who has some connection with reality and who isn't constantly selling nonsense to the public.
And not once did he mention the 10 U.S. Navy sailors being held by Iran.
Yeah. Well, that damages his current world rosy outlook. He does, and they were released today.
Just gave a nuclear bomb to and lifted all the sanctions on. Wait a minute, they have 10 of our sailors captive. Oh well, yeah. I can't talk about that because we're buds, you know.
Yeah.
It must be a clerical error or something, you know.
Well, he has found friends in our enemies, and he has found enemies in our friends.
Oh,
he has destroyed some of our best relationships with Israel. Certainly, you can tell there's a lot of discomfort between him and the Israel Prime Minister
Netanyahu.
and Netanyahu. It's just a mess. He respects evil. He bows to it. He doesn't want to offend people who want to hurt us. He doesn't want to offend them. He believes that by being nice to mean people, they'll kind of cut us some slack. And the exact opposite is what the truth is. You show weakness, and they come in and they take over. That's what happens.
Didn't we learn that as kids on the playground?
Yes.
If the bully knew you were afraid, oh my goodness.
That memo. He missed that memo.
But see, he has bodyguards. With real.
He does, and they have guns.
Yeah.
They have guns. And those guns are going to be used against anybody that shoots him, even though he has brought up on numerous occasions that he would like to have a full debate about whether a potential rape victim should have a gun because the perpetrator may get the gun, or whether a homeowner should have a gun because the gun may actually go off and hurt somebody inside the house. He has every excuse for us to not defend ourselves, but yet he will defend people who want to hurt us and their rights. Unbelievable. It never ends with this president. I've never seen anything like it, and I think he will go down in history with many people saying they've never seen anything quite like Barack Hussein Obama. So there you are.
Just the fact that we elected somebody named Hussein. I mean, I still haven't gotten over that. But, yeah, I'm sure we'll hear later this week Secret Service agents will be turning in their lethal weapons for nunchucks.
Right.
Or billy clubs or flapjacks or whatever. All right. Let's take a look at the S&P.
Well, I'll tell you, we have some interesting stuff going on in the S&P today. Yesterday, we had forecast that it was kind of an interesting day yesterday, that the market was going to move up and test 1945 to 1946 in today's session. And we certainly got that, and the market responded this morning on the pit session to that completion, but they started to move lower, and we instructed people today that if we got any hourly close today below 1920 or 1922, if that did happen, then the market would be in a much, much weaker position, and we would see 1910 or lower. And we did close today's, I think, second or third hour below 19. We closed at 1920.50, and the market indeed has broken down. And whatever our low is today, 1908.25, we've touched that. We do have the possibility in the S&P today and I'm still working on it, but I think we do have a possibility. If they don't fix this soon, we have a possibility of substantially lower prices into the second half of today or early tomorrow. One of those prices would be a break to new lows below the 1892, which is still almost 20 points below us. But I want to see a little more here before I'm ready to, we're out of our short from earlier, but I want to see if we have that possibility.
The low of the week is 1892 half. Is that what you said?
1892. Well, just the 1892, yeah, you got it, 1892.50. Yeah. I want to see the market get, if we continue to break here, then we have a shot. I might as well give the number out. I don't mind giving it. We'd be testing 1888 to 1886 late today or early tomorrow if they continue to press on this. So, you know, that's an interesting set of conditions, and I do want to address also what you said earlier, somebody saying the market coming back and crashing and so on. It is absolutely possible that the forces that are at work that we believe are going to push the market down for several years, our normal yearly top that we forecast for 2015, multi-year decline, could certainly hit the market much harder. I don't know that it'll hit it down to those levels. I don't have a particular forecast for that, but we're working on trying to derive what larger, big targets the market might hit. And I would not rule out an outright crash, because in order to get where we got, the market had to sort of blow through a lot of areas that they may now have to go back technically and test, and many of those are substantially lower. This is why I still want to remind people that if you, you know, if you have stocks, be very careful with them. If you're in an IRA or a retirement account, you know, you plan on holding through all the big declines and stuff, but it could be a pretty good deal here on the downside.
Well, so, I said earlier in the show, I don't know if you had tuned in yet or not, but that this, you know, this might not be a bad. Oh wow. This might not be a bad time to be in cash. Yeah, did you hear that? Did you hear that big noise?
No, it didn't hear. I heard you bump your thing, but I figured that.
No, I was turning on the preamp and turn the volume down before I turned the preamp on. Anyway.
Okay.
So anyway, it blew my ears out. I'm glad it didn't blow yours out.
No, well, it's happened to me before.
Let's see. You mean by fix? Rich says. Rich, I'm not sure what you mean. Anyway, James.
If they don't fix this, meaning, I know what he's talking about. Fix it meaning that if they don't firm up here, if they continue to break some of these important levels, it doesn't get fixed, then we're going to be testing in the 1880s. We're going to take out yesterday's low and so on.
Gotcha.
I think that's what he meant.
Yeah, I think so. Let's see. James had said there's an old Arab saying, an army of sheep led by a lion will defeat an army of lions led by a sheep.
Yeah, and that is really the crux of the matter right there, is that our president does not have the stomach for what's necessary. Not only does he not have the stomach, but he believes that his charm is, he's very self-centered. He actually believes that his kind of apology, his kind of, you know, will lower our standards, his kowtowing to evil people, to bad players, that somehow they're going to be charmed by that and they're going to leave us alone, when in fact they're going to see that as weakness, as Putin has, as Iran has, and so on. Iran is playing our government like a fiddle. I mean, it's practically it's a sideshow how horribly they've handled the situation with Iran, and you can only imagine what a President Reagan, or even perhaps, believe it or not, a Bill Clinton and others would possibly do under these same situations, other than this guy who is really just stuck deep in a delusional worldview that clearly doesn't match reality. And even his followers have said, we can't believe he's doing this and saying that and whatever. The sooner he goes, the better and quicker America will get a chance to recover, and will really, the new normal is that, everyone has a part-time job and your income is down this year from last year and so on. When a real president comes in with real leadership, we're going to see and we'll remember what it was like to have a real, soaring economy, or at least get it back onto track to having that. None of us really remember that because we haven't had it in so long.
Yeah.
The government has grown by 30 or 35% since he's been in office, and it's gotten worse at what it's doing. So we're paying for 35% more bloated government, and the government's not doing a better job at anything that it does, except perhaps the military, but that's been cut as well. So don't get me started. You did already get me started.
Let's take a look at gold.
Okay, so let's take a look at gold. This is real interesting. The gold market did decline substantially over the last several days, and we had forecasts, as I did on your program, that they would move down to 1090 to 88 and so on. They did all that. We're waiting to see if gold closes decently today. I don't want to give out the full forecast, but if we do close decently today, above 83, that's the number that we had given out that we wanted to see them close above. They did yesterday. If they close above 83 and start to close above that level, that at least gives an early indication that we are still in an uptrend, that this decline was simply a reaction to. If we start closing below 83, I think we have a different set of conditions, not bullish at that point. So that's what I would be concerned about. We're not doing anything with gold yet, but we're just simply waiting on the sidelines now to see. So we'll leave it at that for the time being.
Okay.
That's my total thing.
All right. Let's see what else we got in the chat box. Now, yesterday, gold, let me take a look here. On Monday, gold, yeah, this 1091, yeah, that thing came right back. I'll go through this with you guys here. Let's get through as many markets as we can while David still has a little time. We'll come back and we'll talk about that. And about that. Okay, how about crude? What do you got for crude?
Well, we just came out with something today for crude. I won't give you the dates on it right now because I just came out with it, but I do want to say that there is a very important date coming up soon that we think has some real importance for that market, for crude oil. And the possibility, I'll give you the direction, the possibility is that it would have an advance. Now, I don't want anybody to buy any crude oil right now because it's a race to the bottom. We're waiting for confirmation that if the market is able to show that confirmation, then we would know what to do and where to go and so on. But we only gave out that this date would normally be associated with the market advancing into that date. And so because we don't have any indication that that's the case yet, we're leaving crude alone. But it is at an interesting juncture here since that date is here. We did touch into, you were talking about the $29 level yesterday, Dwayne, and we did touch into the 29s yesterday. We closed above it, but we're tapping on it. We're certainly right at 29's door, and I do think you're ultimately going to see lower prices here, and you're going to see us in the 20s. I mean, just as a generality, I think that's going to be the case no matter what. I do have a couple of trades I can show also, or charts here about a couple of these markets, most of which is the S&P. If you want, I'll show those real quick, and then
let me send the charts over. Hang on.
They're certainly putting some pressure on them here today.
There you go.
Yeah, just real quick and briefly. This was yesterday, Tuesday, January 12th. The S&P should test 1945 to 1946 into early tomorrow. So we were down at 1912, but we didn't. We took long positions at 1920, And lo and behold, today they did rally up, and today's high was 1946.50, completed on the Globex session. But they were not able to close well after having done so on the pit session and so on. This was our hourly close. This was this morning. If you take a look at the first hour today is right here. This is the second hour, and we had indicated when they were at 1928 that if they close the hour below 1920, we're going to see 1910 or lower. And they did close. This was them closing, or 1922. If they closed below 1922, we would see the 1910 level, and we did. They closed at 1920.50, and we had a sharp decline. Actually, today's low now is 1906.50. I do want to see them firm up here. It would make it easier for us. The market doesn't always do what the easy thing is, but if they do start to firm up, then we still have the possibility of a correction, that this is a correction in an uptrend that would ultimately do higher prices. If they start to fail here, if we can't fix this, so to speak, we're going to see substantially lower prices until late today. And so we're waiting, or early tomorrow, and I gave those out earlier, we're waiting to see how this all plays out. They're testing these levels now. So that's just the two things I wanted to show right now, and we'll catch up with any other charts tomorrow. We trade the S&P throughout the day, so we start when the market opens and we trade it all the way to the close, and sometimes later, for our clients and so on. But for later in the day, sometimes the market has very clear directed moves. They'll go into a quiet period, and then late in the session, you'll see some very important moves. So we try to be there for those, and we may see that today. It may end up being just a trend day down today. So we'll see.
Yeah, so far it looks like that could be the case.
Yeah.
Let's see, what else is in the chat box here? Richard S. asks, what is your near-term projection for the S&P, please?
Well, they just completed a number of them. The upside, 46, the downside 10. We're below that 10 now. I'm concerned, my projection would be if certain other things get broken today, which I have to take a little bit of a look here, but I would say roughly speaking, if we start closing hourly below 1906 here, it's likely that the market is going to break to new recent lows, and roughly speaking, I would be looking for the market to show us a number like 1088 to 1086. I mean, that's the heck down there from where we are. So that would be my projection right now. I'm not short at this point. We're flat, but we're waiting for a little further confirmation of this. I tend to lean more towards further confirmation, which usually means somewhat less profit. But there is no profit if you get in early and you don't have the high probability. You just think you're going to get a profit, and there's a difference between thinking you're going to get one and actually getting one. And we'll take less money with more certainty any day of the week, and that's kind of a core principle for us. More confirmation equals more certainty, and you often will make somewhat less money by waiting for that confirmation. That's okay. We think that's I think that's a very nice universal deal. You have more chances of making a smaller amount of money. You have a more likelihood of making real money, but just a lesser amount, if you'll wait for this confirmation, as opposed to less chances of making any money if you don't wait for confirmation. I think confirmation is a really underutilized gem in technical analysis that allows you to pick up some gains, and it may not be the whole move, but it certainly is enough of it, especially with this kind of volatility, for you to do something to take a trade. I think if you get down to very, very small time frames, at that point, confirmation becomes, the move is so small that you're looking for it. The moment they start to move, it's over, that kind of thing. But with larger moves, you do have the opportunity to wait for more confirmation. And that's why I've said before that it's easier to make large amounts of money, and it's harder to make less because of that whole thing I just laid out. It just is harder to catch those smaller moves. You have to use a different kind of approach if you really are going to trade very small time frames, and you have to use a different approach if you're going to trade larger ones, I think.
Okay, Tim asked, does David see the S&P hitting 1874 before we hit the weekly bottom low? And Ray asked, are we having a weekly bottom right now in the S&P?
Well, I don't know, honestly, right now, and I'll tell you in just a moment if you just give me a minute.
1875.76 is our next to the lowest weekly trading zone for the week.
Okay, yeah, because I didn't put out a number yet about the 70s, but just for this particular move, this week, the week that we're in right now, is the on-time week for a bottom. But we're not buying it because of that, because we know the danger of a much larger wide-open break that we have here. And the market has acted a little bit peculiar over the last several days with regard to upside targets and moves. I mean, they've completed them. It's just the way that they've done it. And so we're very cautious with that. I would be very cautious also if we do continue to break here, and if we do go down into the 1888 to 1886 level today. If we do that, that's due. That would be due late today or early tomorrow. If we see that kind of number, I'd be very careful before taking any new long positions for like a longer term thing, like a multi-week thing, until they show a little further. Again, confirmation. So there you are.
We just took out the low, the 2 o'clock and the 2 o'clock hour yesterday. We put in a low at 1905.75. We just took that out. Now, if we look left, we've got that swing low, and then after that, we've got the low of the week, which was right here at 92.5. So this thing's heavy. It really is.
Yeah,
a lot of pressure to the downside. I'm sorry I missed David's level he just mentioned. Melissa asked, would you repeat that, please? I don't know.
I'm thinking that Melissa is talking about.
I said 75.76, and Tim had asked about 1874.
Yeah, well, I don't know about 1874. I'm just saying for today, for trading purposes, we're the way the market has acted so far. If we continue to close below some of these important levels, we were probably going to end up taking a trade for a test or attempt at 1888 to 1886. And this is stuff we did give out today, but I'm just giving this out because the market is heavy, it is an unusual position, and it may be useful to people to know that and try to put this together in a trade. I just want people to be cautious about the weekly bottom until we have further confirmation. I would not be leaning on that under these conditions. So, Dwayne, I'll let you get back to your here because
it's on bonds you want to share. Who was it? Richard says, how much more have bonds on the upside and in what time frames? I'm not sure.
Well, I can answer that briefly. First of all,
yeah.
I didn't show this today, but we at the beginning of December, we began forecasting with the bond market at 152 and change that the bonds, and I've mentioned it on this program, we're going to come back up and test 158. Those of you that listen to the program will remember this. And I've mentioned it recently, and they were going to do that into January or February of this year, a very large kind of move. They have now gotten to a high of 157.30, on a 6-handle forecast. That's 6 full, points, $6,000 per contract, and so on.
$6,000 per contract, yeah.
Yeah, that kind of move, the last 2 ticks is okay, but I still think we may still see a pop up a little bit higher into the next day or so on bonds, maybe up at the 158.10 or higher, just real nearby numbers, just finishing this move off. But that's all I have right now is the longer term move, and that wasn't really tradable for the average person. It certainly wasn't for us to sit through all the back and forth to get up here, but it's good to know what the longer term outlook is and then try to put trades together in that direction. That's why the longer term is so important to us. Well, Dwayne, I'll leave it at that. I'll be back tomorrow, and we'll see you guys then. Thanks for the questions. We'll see you tomorrow.
All right, see you tomorrow.
Bye-bye.
Okay. On bonds, now our long signal last night was to be long 150 above 158.02. We haven't got there yet. There's 158.01 and there's 158.02. Swing high so far 158.01. Now bonds pay 31.25 per tick. Okay. We did not trigger on the downside. We were looking for some significantly lower numbers down in the 156 range. Now this 158.02, I will show you here just real quick. Okay. If we take this little tool here, which most trading platforms have this little tool. If we go from the swing low to the swing high, and we bring it over to this swing low here, because that is the low point of that retracement. Okay, so if we take out 158.02, now 158.02 to 158.05, that's going to be a little bit of a battle zone. Okay, we need to see after 158.02, we want to be above 158.05. And then from 158.05 to 158.16, that's a very nice little window of opportunity. Okay. You even back that down to 14. And move this up to 7. Okay, that's a 7-point window of opportunity at 31.25 per tick. Well, that's a $200 per contract move, and that could happen relatively quickly. Okay, depends upon how price reacts. We're at the important price, important area. We're at 158.01. The important price, important area is 158.02. The trade from last night, Concierge Trade Alert, the ZBH6, long above 158.02. Okay, so keep an eye on that. And now targets on the upside. We could see 159.20 if we take out this 158.16. We could see 161.14. I mean, that would be bonds on a tear, but it's not impossible. Now, this little tool is simply based on the math of Fibonacci. It's no proprietary secret weapon. Again, almost every trading platform has that built in. You just have to learn how to use it. And if you become a partner, I will spend time with you in a mentoring session, and I will help you master that tool. It's very good at projecting targets for moves both to the upside as well as to the downside. Okay. All right. We covered the S&P. First move down, 1927. First hour, 4 points were available. The second hour, 9 points were available. If you were trailing a stop and you were able to stay with this trade, even just part of your position. Okay. This low is 1675. Now this low so far, now you look left here, okay? This should offer some good support, but this should have offered some good support. Just as, let me show you here, and to kind of drive home this point. Where'd that go? Oh, here it is. Just as on the daily, this should have provided good support. The 62% retracement on a daily chart, man, that thing should have bounced for days under typical normal conditions. That's not what we have right now. We have a market that is very heavy. Let me bring back that daily chart again one more time. Okay, now if I scroll to the left just a little bit, okay, this was the beginning of last year. That's December 29th, that's the 30th, that's the 31st, and right here, the candle that breaks out of this little box right there, that's the first trading day of 2015, okay? And so we spent all the way up until February 10th before we got a nice solid close back inside of this range. And steadily sideways until August, and then it took us until October to get back into the zone. And we've talked about this a lot in the last few days. So you see this price here. I mean, we're trying to take out the low of the 11th. It appears that's what the market wants to do. So then that leaves us with the low of the 29th. And then that leaves us with the low of last August. August 24th of last year. That was the low of the year. And the low was 1831. 1831. Now, we're a fair distance from 1831. Our lowest weekly trading zone for this week is 1824/25. So in our calculations, math has allowed for that as a possibility this week. Okay? It's not a prediction for it to happen, but it is within the realm of possibility. Now, I did mention that the second to the lowest weekly trading zone for the week is 1875/76. That's starting to look like a very potential reality. 1876. I got the wrong one loaded. Okay. So 76. We'll do this. The number is 7576, so I'll just color it in. And we'll take that line out and we'll write it in. 1875/76. Okay. Next to the lowest weekly zone, the lowest zone is 24.25. Now this swing low again was 31. That was the low of last year. So I'm saying that this week there is a possibility that we take out the low of last year. Not a prediction, but a possibility. So keep an eye on that. Okay. All right, let's go back to where we were. Here, we've already covered this. So our Concierge Trade Alert last night for the S&P, that worked out great. Bonds were still to trigger long above 158.02. We've tapped 158.02. Could easily reverse at that number. That often happens. But if we press through it, we know the numbers on the upside that are important. Crude oil in our alerts last night. On crude oil, long above 31.20 and short below 30.65. Okay. Here's 31.20. That was the first trigger. And we ran up to 31.40. That's a 20-point move. It's $200 per contract. Now, if you're trading the 2420 blueprint, and you're trading crude, that's the only thing you're trading, you need 10 ticks. That gives you your $100 per contract per day. So whatever number of contracts you're trading, and you multiply that times 100. However, this went double the distance. This first move ran up to 40, so that was 20 ticks. Okay. Then important prices, important areas are almost always tested, and so price comes back below the trigger. Off it goes again. This time we put in a swing high, 31.37, so that's 17 ticks. Price gets below, and then off we go again. In this hour, we run up 10 ticks. We get back below the trigger. We run up again. This time we run up 36 ticks. And then we get back below the trigger. And this time we run up 51 ticks. I'm not going to bother to add all those up because, again, if you're trading the 2420 blueprint, you are done. Any one of these triggers gave you ample opportunity. This final move, the biggest move to the long side, triggered at 31.20, hit 31.71. Okay, that's 50 ticks or $500 per contract. That's what the market made available. Doesn't mean just because you were in the trade, that doesn't mean that you made $500 per contract. It means the market made $500 available. Big difference, okay? You have to determine when you write your business plan and you write your trading plan, you've got to determine how you're going to handle these situations. How are you going to trail your stop? And it has to be consistent. It can't be, well, I'm going to try it this way today and I'm going to try it this way tomorrow. And I read this article, I think I'll try it that way. Because at the end of the week, end of the quarter, end of the whatever your measuring stick is, when you look back to try and see what worked, what didn't work, you really have no idea. Because you had a different approach each day. So when you step up to the plate and take your swing, it has to be a consistent swing. Now, in your business plan, it should state how often your trading plan will come up for review. You don't trade it in the middle of a session. You don't trade it, you don't change it every other day. Maybe you want to look at it once a month. Maybe you want to look at it once a quarter. Remember, in order for it to be in your trading plan, it's already been vetted. You've already proved to yourself that it gives you a definable edge because it allowed you to make $100 per contract per day, 10 days in a row, and 10 trades or less. That's hard evidence. You could take that into a court of law and say, here, I have proof. Nobody can get lucky 10 days in a row in these markets. Not no way, not no how. It just won't happen. Wow, I just had a van pull up in front of my house from the crime scene response unit. To my knowledge, there's been no crime here. It's like the CSI van, you know, on like Miami CSI. Huh. Guess I have a wrong address, because so far everything here's A-OK. Knock on wood. Okay, so we talked about the triggers on the long side, but we triggered on the short side as well. So in the event you missed these long triggers somehow, on the short side, from 30.65, we dropped all the way down to 30.10. That's a 55 tick drop, $550. The beige book just got released. We hadn't talked about that today. So the markets could get a little volatile here. Let's see. Beige book, usually not a big market mover, but you might want to be flat for a moment and see, as people have a chance to read through it, it could have some effect on the market. All right, let's get back. And this, it could have had some effect, you know, into this decline, although it's supposed to be secret until they release it. So back to crude, 30.65, then important prices, important areas, almost always tested. So we get back above the trigger, down we go again. This time we get down to 42. So from 65 to 42, that's 23 ticks. And then we get back above the trigger by how many ticks? By 3 ticks. Down we go again. This time the move is 30.15. So that's a 50 tick move, or $500 per contract. So crude was just ripe with opportunities hour after hour after hour, both on the long side and on the downside today. And so even though crude is beaten down, and, you know, as consumers who drive gas-powered cars, I mean, for us, you know, we want to see lower oil prices. In theory, that translates to cheaper gasoline at the pump. But there's a bigger impact that lower crude prices has on the world at large. Okay? Now, can that be good? It can. Can there be negative impacts for certain businesses and industries? Could they be forced to lay off employees, and so our unemployment rate starts to climb again? Oh, yeah. You know, I talked to a gentleman, was it this morning or yesterday, who went to college and studied to be an economist. And so these are the type of people who can take this bigger picture look at these situations and say, what will the ramifications be of lower oil prices, other than happy, you know, family faces at the gas pump? What are the larger ramifications? And we've got all this glut of oil from Iran about to hit the market. We talked earlier in the show today about this glut of oil from Libya about to hit the market at cheap prices, because they need some money so they can feed their people. Not that they'll use all the money to feed their people. They'll, you know, buy some trinkets and treasures for themselves first, but they will, I'm sure, spend some of the money to feed their people. Maybe I give them too much credit. I don't know. Okay, here's the euro. Last night, when the alert went out for the euro, long above 108.50. Okay, so if you heeded that, if you said, I like the sound of that, and I'm going to be long above 108.50, now, stretch this back. What time did I get that out last night? I got that out last night at 10 p.m. Eastern. So that's going to be 2,200 hours. So let's drop this here, because that's the 2,300 hour. Okay. So pull this across. All right. So on the first trigger, now crude oil, the euro pays 12.50 per tick. So the swing high here was 44. Let me write that number down. 108, long above 108.50. Do I have this in the right spot? Yeah. Okay. $108.50. Hang on one second, guys. Okay. Okay, so 108.50. All right, and so we've got a swing high. This first one here, okay, this only goes up. This is 2 ticks. Now, depending upon where you put your stop, okay, if you're using an 8-tick hard stop, this very well may be a stop out for you. If you're using the dynamic structure of the market to place your stop, then you're going to be okay, but you're going to actually hit a deeper stop unless you're out here, and this only goes up 5 ticks. Okay, so this was a rough area here. This was an opportunity to, take a stop and live with it, because that's the truth about trading. You will get stopped out. Best trader on the best day is correct 7 out of 10 trades. That's the best trader on the best day on planet Earth. And so you have to learn to gracefully accept the times that you get stopped out. I wish there were a mechanism where I could only give you this trade. Okay, this trade went from 108.50 up to, we'll call it 10900, because that is the high. So that is 108.50 to 900. Let's see, 850, 60, 70, 80, 90. Yeah, so that's 50 times 1250. So that's $600 per contract. Okay, 1250 per tick. We've not come back to challenge yet. On the short side, let's see if we triggered there. Short below 108.25. Rough day for the euro. Okay. Now, we make no excuses for days when we have trades that get stopped out. because again, that's the truth about trading. If we said anything else, we'd be peddling magic, and we don't peddle magic. Now, if you have access to the indicator set, if you have access to the range chart, you're able to, this trade right here, that got stopped out. If you are watching it on a 4-tick range chart, and if you go back to some of the previous recap videos on the Google Plus page, you'll see where I overlay the indicator set on top of the trade alerts. What they will do is they will often allow you, because there is a magnetic attraction around these areas, where, and that's why price is constantly coming back to it again and again and again. And so once you're above what I call the 50-yard line, and if you go see, if you look at some of the old videos with the recap of the Concierge Trade Alert and the indicators, we only take the long trades above the 50-yard line, and we only take the short trades below the 50-yard line. And what you'll see is, in case after case after case after instance, is that you'll have your points, your daily goal, before you even hit the long trigger. Now, I wish I had more time so we could drill down on this one, but I've got to try to get through the rest of these real quick. Maybe I'll be able to do a video tonight. Last night on the Dow, the YM, we said to consider being short below 16,430. 16,430. So let's go find that. Now, keep in mind that the Dow pays $5 per point. There's no ticks involved. 16,430, 30. Here we go. 16,430. Okay, so we've got this obvious huge move here. Now, where are you going to put your stop? Again, you're either going to use the 8-tick range chart, which will potentially get you into this trade early, okay, because we're looking to be short at 430. I'm going to guess if you go to your range chart, you probably get a short signal up in here somewhere. I wish I had time to stick around and go through it today. You know, I used to be able to do the 3 and the 4 hour after shows, but because of all the mentoring sessions we're doing in the afternoon now, I just don't have the time. And I miss that, because that was some of the best radio we did back in the day, was when we had those extended after shows, as they came to be called. Now, again, here, we just break below it. We get down to a swing low of 24. And then here comes what we're looking for. This is the move. These were early head fakes, okay? But once we pushed through here, this first hour took us all the way down to 358, call it 60. So that's a 70, a 70-point move. And this entire move has taken us all the way down to 154. So from 430 to 154, I'll let you do the math. You multiply that times $5. That's what the market made available from the trigger. Okay. The only one we haven't covered, I think, is the Russell. And so let's see if we can't do that real quick. Then I got to go. All right, here's the Russell. All right, and on the Russell, the alert was simply short below 1033. Oh, it said 1047 too on the long side. So let's look at 33, which is right here. 1033. Okay. Okay. And then 1037 on the upside. Or no, 1047. So let's find 47. And the alerts came out at 2200 hours, so that's down here. Okay, so let's pull this down. Let's hit 47. Long above 1047. So if we pull it down, there, 1047. So again, it's kind of like the euro. A couple little head fakes here. This one put in a high at 47.30. Okay, 8-tick hard stop. You're out. Another one here. This one put in a swing high at 47.70. So that's 7 ticks. If you're trading the blueprint, obviously at 4 ticks, you move your stop to break even. But if you're trading with a larger target and looking for a larger target with a larger stop, then this is going to cost you more. Okay? I don't have any problem showing you these days. I don't have opportunity to show you a lot of these days, but when these days come along, I want to make sure that I do show them to you, that I do point them out. Now, when you're thinking about going long here, I want you to this is an hourly chart. I want you to see where price topped out here. And we did put in a higher high here, but look how it was rejected. Okay, that rejection's very, very important. And so we kind of know that we're running into a headwind here, but that's how the math played out. So that's what I gave you was 47. You know, I could have manipulated it and went way up above price, but this isn't about breakout trading. Okay, this is something very different. So will there be days like this? Yeah. And then will there be days like this where you can step into a trade at 1033 and it drops down to 10, 11, 19. So that's 13. So that's a 20-point move. Okay, 20 points. At $100 a point, that's a $2,000 move. So you get a couple stop outs here, and then you have an opportunity for $2,000 move. Now, you won't get every penny out of that unless you're trailing way back here. Okay? Now, at this time of day, could you be trading 10 contracts? Yes. Could this be a $20,000 move? It could be if you have that skill set, if you have that type of an account, if you've been trading for a while. Now, the Russell only costs $500 per contract to trade. So to trade 10 contracts, you only need $5,000 in your account. Margin-wise, of course, you have to have that 1.5 times rule. You got to have funds there to cover drawdowns. You've got to have funds to cover your stop out. Okay, but this low barrier to entry is very seductive. Don't let it suck you in. Okay, am I saying you shouldn't trade 10 contracts? I'm saying you don't go from sim to 10. You go from sim to 1. From 1, you earn the right to trade 2. And from 2, you earn the right to trade 3, etc. Okay? Now, I can't stress enough the importance, and this is just a beautiful example. I tell this to people all the time, but it doesn't always sink in. Having these alerts, whether it's on the one trade a day or the Concierge Trade Alert, this is a huge, huge bonus. It's a huge opportunity. It's years of experience looking at the markets. Put in an email for you for your convenience. But underlying is your ability to trade. You really need to learn how to trade. If you came to me and said, hey, I'm trying to decide if I should become a partner or if I should get an annual subscription to the Concierge Trade Alerts, which should I do? I'm going to ask you, do you know how to trade? Are you consistently profitable as a trader now? And if the answer's yes, and you say it with enough conviction that I really believe you, then I'm going to say, oh, grab the Concierge Trade Alerts then. But if your answer's no, I really don't know how to trade, but I thought I would just get the alerts and I would just trade those, and I would say, oh, okay, now that's a different story. The Concierge Trade Alerts for a year cost you twice as much as what we charge to teach you how to trade. But it's much more important that you learn how to trade, because there's no guarantee that I'll be sending out Concierge Trade Alerts every day for the rest of my life. Anyone that's on an annual plan or a quarterly plan, obviously I'm going to honor that. And if at some point in the future I decide to stop accepting new subscriptions, plenty of advance warning will go out, and then I will honor out all subscriptions. But, you know, someday I might want to go stick my toe in the sand or hang my foot off the back of a boat. You never know. So which is more important to you? That you know how to trade? That's something nobody can ever take away from you. But the moment I stop sending out these emails, then where are you? You see the difference? So priority number one, learn how to trade. And then if you want to put some icing on that cake, the Concierge Trade Alerts can put you into these kinds of trades. And I love it when this happens. And when this happens, I'm reminded that's the truth about trading. If you've never read the article, The Truth About Trading, you should. Just Google The Truth About Trading, CFRN. It'll pop right to the top. Read that thing, okay? It's really important. And it will change how you think about this business of trading. And that's how we look at this as a business. It's not about us selling you a couple indicators and wishing you the best of luck. It's about helping you understand how to behave with discipline. It's about teaching you how to think in probabilities, and then helping you through your business plan, through your trading plan, understanding the blueprint, and then building that business one brick at a time. Thinking in probabilities is going to be a real cornerstone, if you will, to your transition from someone who has experienced repeated failure. You've opened accounts and you got some indicators, and maybe you got a guru and you got pretty pumped up, and it happened. Then it happened again. Then it happened again. But there's this little spark inside of you that just won't die. It won't give up. You know deep down inside that there is a way not to beat the market, because you can't, but that there is a way to trade the markets and have a positive and profitable outcome. And that's our goal, is to help you get from where you are and wherever you've been to that place where you want to go. We won't put any unrealistic expectations in your head. Remember, we're going to teach you how to make $100 a day. I realize that doesn't sound like a lot, and you say, man, that won't even pay my bills. It won't today. But if you get real good at learning how to make $100 a day and you do it consistently, then you'll earn the right to trade 2 contracts. Now that's 200. Well, that still doesn't pay my bills. Well, hang in there, okay? Remember, to become a doctor, you got to go to college for 10 years. The average doctor in America makes $150,000. Do the math on what a 10-contract trader makes who only makes $100 a day per contract. Think about that. Is it worth the effort? Can you exercise the discipline? We can provide you with the education. We have the tools. The heavy lifting's already been done. It's really up to you. And that's why we give everybody a 5-day free trial to come and download the platform, install the indicators, put on and take off trades for an entire week, not just in the live trading room while Michael is putting on and taking off trades, but for you to practice after the live trading room closes, so that at the end of the week, at the end of the 5-day period, you're able to make a well-informed decision as to whether or not, hey, this is different. There's a rhyme to the reason here, a method to the madness. I actually believe I can learn how to do this, that I can learn to be consistently profitable. I won't get rich overnight, but I can build a business. And so that's our goal for you. I've got to run. I've got all these sessions. I wish I had more time. I'd like to go over a couple more charts with you. Depending upon how it turns out, tomorrow I might be able to stick around just a wee bit longer. Thank you so very much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Always pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.